Hey, this is Ryan with TrendLizard.com. We're going to take a look at SCZ, which is the iShares Small Cap ETF. We've looked at this one before. We're just doing an update here. It's very similar to the overall market as far as like the S&P 500, the Dow, NASDAQ, all the other major indexes as far as where they are in their progression. It's been in a very large bull market since 2009, a large five-wave move. It is in the final move of that advance, and we expect a major high to occur at some point in the not too distant future. But as is, it is still heading up, and as long as that's the case, you need to be bullish on the long-term time frame. So we're going to zoom in a little bit on this more recent action to see where we are as we near a more important high. Jumped to the wrong chart here. So here's zoomed in on the 2016 advance. This is again the last leg of the bull market, and as you can see here, it is also developing into a nice five-wave advance. Once this five-wave advance completes, a major high is expected, but again, until that happens, you have to expect higher prices. So since the last time we updated it, the market continued higher here for SCZ, hit a wall like just about everything else did in early 2018, and pulled back from there and has since tried to recover. So the fear is that a larger pullback is going to form off the 2018 high. Not really a fear, but more just makes you wonder if now is a good time to buy or not. That's kind of up in the air at the moment as we determine if a larger pullback is going to form or not. But either way, the five-wave advance off the 2016 low is not done. Higher prices are expected overall. The only variable is whether a larger pullback will form off the 2018 high or not. So let's go ahead and zoom in on this action here. Here's what it looks like. The potential for a larger pullback is shown here. Basically, if SCZ moves below 63.50 at any point in time, it confirms that this pullback's not over. So it's going to take pretty much immediate and direct strength off of March's low to indicate that the uptrend has already resumed. So I'd call it a 50-50 proposition right now, just kind of like it is with everything else that we're looking at, the Dow, the NASDAQ, S&P 500, NYSE, everything else. It's kind of up in the air as far as where this is going to head in the near term. Overall, it's bullish, but you have to be cautious in the meantime. If you own it, you could be as aggressive as putting a stop at 64.50 because a move below there would all but guarantee you that this guy is going to break back down. But the most conservative and most important level is 63.50. SCZ has to stay above that level to keep things on the up and up off the February low. And if it can do that, it could resume, or this could prove to be the resumption of the uptrend already. But again, it's about a 50-50 proposition right now in the near term. Otherwise, it remains bullish on any larger time frame. Despite being late in the game, it still looks like there's some upside to be had. So hopefully that's helpful. We'll take another look in a moment at another ETF. Thanks.